Saturday, 1:07. You know what that means? It means it's time for Inside Georgia Real Estate with my good friend and my dear sister, Deborah Morton. She's the founder and owner of Clario Real Estate. Welcome back.
Hey, Shelly. It's good to be here. We've got friends.
You've got friends. So we got friends because today we're calling, off the top of my head, I'm calling this Mortgage Day.
Yes.
Because of this week's news. Tell us what happened this week.
Yes, so it's a hot topic in the news right now. The Fed met this week, made some historic cuts that everybody's been excited about. And so in real estate, everybody's asking right now, what's going on? How will the Fed rate cut impact mortgage rates? Is it finally time to go buy a home is the question. So today we brought our friends from Alcova Mortgage.
And that's Ryan Charles. Welcome, Ryan.
Yes, sir. Thank you. Good to be here.
And Jay Goss.
Nice to meet you.
Nice to meet all of you. Thank you for joining Inside Georgia Real Estate with our good friend and sister, Deborah Morton. So the rate cut, 0.5%.
Yes.
What does that mean? Because we hear that regular consumers hear 0.5%. That doesn't seem like a lot because it went all the way up to 7%. So what does that really mean in real dollars?
Well, and what's interesting is this is why I brought mortgage experts to talk about it, because the Fed rate cut does not necessarily it's connected, but come on, guys, it's time.
Ryan,
I'm going to tag in here.
Jump in here and do what you do.
Okay, so the Fed cut a 0.5 point on Wednesday. We've been waiting for this. It was expected, and it came through. This is the cost of money, the overall cost of what banks charge each other overnight, so very short-term loans. What was directly impacted? Okay, auto loans, home equity lines of credit, credit cards. These all went down 0.5% on Wednesday, okay? What didn't go down on Wednesday? Mortgage rates.
Why not? Yeah, go ahead. Yeah,
good question. All right, so the reason is mortgage rates are closely tied to a 10-year bond. That is not an overnight rate. It's 10 years. That's a long time. So mortgage rates actually predict the future. So it takes a lot longer to have impact.
But let's talk about why rates. We started seeing a reduction in rates a couple weeks ago.
Yeah, well, yes. Last Halloween, I won't forget it, because trick or treat, we were at 8% on interest rates for good credit.
Yeah, we all remember that.
We're almost down 2% in a year.
Down
right?
to 2% or down to 6%?
Yeah, we're down 2% to around the 6% range now,
Gotcha.
right? So in just a year's time. So this 0.5% rate that the Fed cut this week has been being cooked in for the last 6-8 weeks. In fact, we're already pricing in the next cut that's expected to be 25 basis points on November 9th. So, it's always forward-looking. Mortgage rates are not directly tied to it, but it is akin to it, right? It's the cost of money. Mortgage is money.
Jay.
So explain.
We need Jay to jump in here with her take on the calls you're receiving from people inquiring about mortgages today. What are you hearing? What is people's fears, and what are they asking you?
With respect to this rate cut, or just rates in general?
Yeah, people want to buy houses.
Sure, absolutely. I think that the reality of the situation is it the right time? It's not really about the rate. It's
always about the rate.
Look, you can date the rate. marry the house, date the rate. You can always refinance down the road. I mean, I think that if it's the right time for you to buy, that's what you should be taking advantage of. You can always refinance down the road.
So I'm hoping today our callers are going to be calling in with questions specific about mortgages. Now, we can answer mortgage questions anytime. And of course, I can always connect people to Ryan and Jay and our awesome lenders to speak about. But how does it impact housing? What we expect to see because of this, it has spurred a lot of interest. So what I can see on my end is there's an increase in activity online. People are looking at houses.
Do you think that's because of Wednesday's news?
Absolutely.
Gotcha.
Yeah, because people let's face it, none of us are, this is complex stuff. If you want a house and you've been sitting on the sidelines for a couple of years because it's just been too expensive, now might be the time to start looking. And one of the questions I've heard several times over the last couple of weeks is, well, maybe I'll wait if they're talking about another rate
That's what I was going to ask.
Right.
Because, Jay, you kind of just said that. You said that you're kind of starting to bake in the next cut.
That's right.
Now, so I should probably wait to see what that new baked-in number is, right?
Well, that's just it. It's never going to stop moving, right? And no one knows for sure what's going to happen next. Not even the guys pulling the strings at the Fed. That's why they say they're data dependent. They're going to look and see what happens. So here's the risk, and here's why some people thought it was going to be a 25 basis point cut instead of a 50. And believe it or not, the day that they cut the rate 50 basis points, the mortgage rates got just a hair worse. Why? Well, mortgage rates the enemy of inflation, okay? Bonds. And when it looks like inflation can come back, so some people think like, hey, maybe they shouldn't cut 50 basis points because it's inflation. You're feeling it at the grocery stores, right?
Right.
Every bill everywhere is kind of heavy. So they're afraid that if they cut these rates too early, then inflation will come back. If that happens, rates go up. So I will urge you not to be to try to be too smart here, because no one knows. I mean, I've been doing this 20 years and I don't know.
Well, and it does impact pricing. So let's say a lot of people have been sitting on the sidelines waiting to find the perfect house. Oh, it's too expensive. Oh, rates, there's been a rate cut. We're at 6% or just a little bit under. I'm going to go buy a house. If that drives a lot of activity into the marketplace and we still have low inventory of homes, what we're going to see is pricing going back up. So, so supply and demand happens. While rates have been higher, we have been in a position to negotiate some pretty good concessions on buyers' behalf. It's not, the numbers don't indicate a true buyer's market, but it was more balanced. The more people that flood back into the real estate market to look for houses, that is going to drive the demand, and prices are going to be impacted.
So let me ask this question as just a normal guy, right? Like many of our listeners. By the way, ladies and gentlemen, the number is 404-872-0750, 1-800-WSB-TALK. Those are the numbers to call in with your questions, particularly on mortgages and everything like that. If it drives prices up on a home, but my mortgage rate is lower, doesn't it kind of become a wash at this point?
See, that's just it. No one knows what's going to happen. What if rates go up and prices go up? Because that can happen too. There's so many things don't happen in a vacuum, but it is supply and demand driven. But if the rates go up a little bit, which they don't tend to go in a straight line,
right?
So you really can't time the market. If you try to do that, you'll probably make a mistake. And like to Jay's point, sometimes life trumps finances. And, if you need to buy a house because your family's growing, or if you have a situation where you need to have more space or whatever the case may be, sometimes the rate isn't quite as important especially if you're trying to time it, right? So
Jay, you had spoken earlier about just refinance, right? Will we ever get to a position where we once were with 2%, 3% rates? I mean, will you ever be able to get down that low as a consumer, do you think? Not on buying initially, but in refinancing.
Well, I think if I had that crystal ball, I would probably not be here. I would be on some awesome tropical island somewhere making lots of money with that information.
Right.
But, whether or not we'll get back to those rates would be amazing.
Well, not if it comes with a pandemic, because that was all instigated by crisis.
Yeah.
And nobody wants that.
Gotcha.
So
sure.
I'll tell you my opinion on that. If we do get in a place where the rates are as low as they once were in the 2s and 3s, it's because there's other pain, substantial pain we're feeling somewhere else. Yeah, a severe recession, pandemic, right? Mm-hmm. Something that we don't expect to happen. If we need to stimulate the economy, the way to do that is to cut the rates. Yes, the rates go down, but that's because we're feeling unemployment pain or whatever, and that can be much more substantial than a higher rate.
It's really all just a tricky balancing act.
It is.
Which goes to your point, Jay, about the consumer not really trying to dance in that balancing act and just buy or, get what you want when you want it, not looking at things. That's, to your point, also
Shelly,
right.
the 40-year average is about 6%. So if rates are 4.5%, yay. If they're 6.5%, you're still close to the average.
Right.
There have been times, if you're really old, you remember when rates were up closer to 10%. Nobody wants that, and nobody is predicting that's going to happen. But housing, mortgage pricing and housing prices together are what we need to look at. And as your expert, that's what we're
when
here
you say
to break
a
down.
Mortgage pricing and housing together, can you kind of drill down on that a little bit?
Housing affordability was what we talked about last week, and it's a constant topic. Housing affordability is my area of expertise. It is not as affordable for people to buy a home now as it was years ago.
404-872-0750, 1-800-WSB-TALK. Give us a call. Any question you may have around Georgia real estate, but we have experts. Alcova Mortgage, Ryan Charles and Jay Goss are in the studio with us, with Deborah Morton and I, and they're going to answer all your questions around mortgages. So please give us a call, 404-872-0750, 1-800-WSB-TALK. The show's called Inside Georgia Real Estate with the great, brilliant, beautiful Deborah Morton. We'll be right back.
Want to make a difference in your community but not sure how? Go to GoFundMe.com right now and start a GoFundMe. Seriously. Your next fundraiser doesn't have to start in a school parking lot or a church basement. You can start a GoFundMe today in just minutes. Fundraise for yourself, a friend, or family member, or an organization. All that matters is that you care about them. GoFundMe is the trusted place to fundraise for what you care about. With no pressure to hit your fundraising goal, but tons of tools to help you reach it, you can confidently start fundraising right now. Whether it's creative, local, or critical, your cause matters. And there's a reason why GoFundMe is backed by millions and chosen by fundraisers everywhere. It works, and it matters. GoFundMe helps you make a real difference. Start your GoFundMe today at GoFundMe.com. That's GoFundMe.com. GoFundMe.com. This is a commercial message brought to you by GoFundMe.
95.5 WSB, Atlanta's News and Talk.
Hey, it's 1:22 on a Saturday afternoon. You know what that means? That means it's time for Inside Georgia Real Estate with Deborah Morton of Clario, founder and owner of Clario Real Estate. You can go to InsideGeorgiaRealEstate.com for more information. But Deborah's here, and also Ryan Charles and Jay Goss. They are from Alcova Mortgage, and we're taking all your mortgage questions today. 404-872-0750, 1-800-WSB-TALK. Let's go to Randy. Hey, Randy.
Hey, how are you?
Wonderful.
Question for you. I had signed a contract on my home, was pre-approved for 2.5%. Less than a year later, when I got close enough to lock in while they were doing the rate hikes, it went from 2.5% to 7% in that 1 year time. And now you're saying that the rates are baked in and they're going to come down slow based on that. Why did they go up so quickly, and then it's going to take a while to come back down?
Yeah, I feel your pain, and I'm sorry you're going through that. It's, victim of bad timing. Rates tend to go up on an escalator or down on an escalator and up on an elevator, and it's unfortunate that that happens like that.
Well, why is it that? Why? I mean, because
Well, I would say the reason is the Fed has a lot of control over what happens with the money in general, mortgage rates, overnight rates.
We're getting ready to go deep here because.
So,
The Fed's listening.
Here's the thing. The Fed, if they can have the ability to have a soft landing, then that's what they're going to do. So they're going to try to lower the rates, at a measured pace. And I'm stealing a word from Chairman Powell. He likes to use these buzz terms, measured
Randy,
pace.
my opinion is they waited way too long to raise rates at a reasonable. What they did was put the brakes on a market that was out of control. And that's why we have an affordability problem right now, because what was happening when rates were that low was everyone was on a buying frenzy and nobody cared what anything cost.
Right.
And it was a tough time in real estate to get buyers and houses, and they were very carefree with their purchases and their money.
But go ahead. With their purchases and their money.
Yeah. And then
Yeah, and here's the thing. With inflation, all right, so everyone was feeling the pain, right? Everywhere, especially the groceries and everything. It was out of control. Is the rate of inflation. How do you combat that? You have to increase interest rates. And if you don't feel like you got inflation under control, what do? You raise rates again and again and again until the interest rates get the idea.
But here's the thing, though. But Randy's question, I think, it's like pricing. It's like prices for food. Same thing. it's shot right up. They're telling me the economy's getting better, but nothing's coming down as quickly. So to Randy's point, what does a consumer do in that situation?
Yeah.
He's pre-approved at 2. When he goes to close at 7. How, like, as a mortgage broker, how do you make this guy feel better?
Yeah, it's like what Jay said earlier. You know, you don't get to choose your timing, especially if you're building. I think that's what he said. That's why it took so long, right? So you have to play the cards you're dealt and then improve your situation later. So, you know, hang on there. Rates are coming down. Like we said, they're down 2% already from the highs. I do expect them to continue to go down into next year. Of course, there's no guarantees, there's no crystal balls. If inflation starts coming back, then rates aren't going to go down anymore.
So to Randy's point and to Jay's earlier point, let's say Randy says, okay, buy what he bought at 7% and then I refi.
Right.
But he can't keep doing that every time rates go down lower, right? You have to,
That is
you
a
can.
great question, Shelly.
You can. Okay,
Yes,
go ahead, explain
absolutely.
that. Listen here, hold on. Randy, you're listening? Are you listening, Randy?
Yes.
Here's your solution. Go ahead, guys.
Well, I would say, you know, you don't have a choice to when you got to close. You do the best you can on that rate. The general rule of thumb is if you can save at least 0.75%, that you should look at refinancing, especially if you're planning to stay in that house long term. So if that's the case, each time you can take steps down, you know, and yes, it costs money to refinance, but you have to look at the big picture. How much can you save? And then you decide if it's the right time to do it. You can do it multiple times.
And is it the right house for you?
Right. And what's your long-term goals? Are you going to be in that house long-term? Then you can refinance and save the money.
404-872-0750. 404-872-0750. 1-800-WSB-TALK. 1-800-WSB-TALK. All your real estate questions are going to be answered today, especially any questions that you may have around mortgages. 404-872-0750. 1-800-WSB-TALK. Inside Georgia Real Estate with Deborah Morton. And Ryan Charles and Jay Goss are in the studio with us from Alcova Mortgage. We will be right back. Ladies and gentlemen, my name is Shelly Winter, and sitting across from me is Deborah Morton. She is the owner of Clario Real Estate, and she is the expert on all things Georgia real estate. The name of the show is Inside Georgia Real Estate. By the way, if you cannot get through on the lines, you can email Deborah at IGRE, Inside Georgia Real Estate, IGRE at WSBradio.com, or you can go to InsideGeorgiaRealEstate.com. We're also joined in the studio with Ryan Charles and Jay Goss of Alcova Mortgage. This is Mortgage Day. The Feds cut the rate this past week, and so we're taking all your questions on mortgages. And that is so. Deborah, I want a home. I call you. You ask me a bunch of questions. What am I looking for?
We call that a consultation.
Consultation, right? You ask, but the point is, you ask a lot of. You don't just walk around with me.
No,
ask a lot
sir.
of questions. You want to know what I want. That's important. But I would argue that the mortgage is kind of the centerpiece of this entire business. Am I right?
I would agree, because who wants to sell you a house if you have no money?
Right.
And the truth of the matter is the mortgage part of the process and the real estate part of the process, they go hand in hand.
Right.
And the way I see it is that we're forming a team. Shelly, you want to buy a house. Well, you need a team of experts on your side to guide you every step of the way. I'm going to stay in my lane with my real estate expertise and guidance. Your mortgage professional is going to stay in their lane. For instance, I'm not going to have access to any of your personal confidential financial information. Your mortgage lender is. There are clear boundaries between how we operate when we help people buy homes. And your mortgage professional is the key to making that happen, because I can find you the right house, negotiate one heck of a good deal for you. But if I don't know how to package it up to get the seller to accept your offer, part of that process is presenting excellent terms. And it's my job to pitch you as the best, especially if there's competition. I want you to shine like a superstar and pitch you. So I'm getting you not only the best price on the house, but your lender is getting you the best mortgage package, so you don't pay too much for that house over the term of your ownership.
404-872-0750, 1-800-WSB-TALK. Let's go to Wolf in Noonan. Hey, Wolf.
What's up there, Shelly?
How you doing,
Haven't
bro?
talked to you in a while.
Yes, sir. Yes, sir.
Well, do I got to repeat the question or?
Yes. So the reason why, so everyone listening can hear your question.
All right, I paid off my mortgage.
Congratulations.
Oh, thank you. I've adopted 2 young ladies, and I want to buy property that's not developed for them to play on, to hunt and fish, or just learn how to live in the wilderness. And what's the best way to buy property that's not developed in the state of Georgia? Because I'm in Coweta County, and the prices are just skyrocketing. And like my home, I can't sell my home and move up without another mortgage because the prices have just skyrocketed.
Well, so you have a lot of equity in your home there, Wolf, and that is an asset that is valuable. Take it, Jay.
I would say that you potentially are in a beautiful spot to take advantage of what you're trying to do. I think that, trying to invest in real estate, build your investment portfolio, and your wealth is key. I mean, let's face it, God's not making any more land, so.
That's correct.
Yeah, right. So I think that there's no better person to borrow money from than yourself.
Hold on, Wolf. Go ahead.
Yeah, I think there's no person to borrow money from than yourself, my friend. If you own a home free and clear and you want to take advantage of buying land, leverage your home to do that. You can do a cash out refinance. If your home's worth $400,000, you can pull up to $320,000 and you're buying land and paying cash for it and building your wealth.
And then you have a fixed rate versus going, or you could go to like a local credit union will probably have the best terms on raw land versus, say, an institutional lend. There's lots of options with lending. But with buying raw land, like we talked about last week on the show, some of the better options, you're going to have to put more cash down to get a mortgage or to borrow for land. Higher down payment, right?
Yep. So, Wolf, congratulations on paying off your mortgage. Let's get you another one. And the reason that you want to leverage your primary residence is because lenders are going to give you the best terms on borrowing against your primary residence. Think about it. If you fall on hard times, you're going to keep making the payments on that versus the land, right? So the land loans are going to be more expensive. So that's why Jay's advice is on point. If you can leverage your primary residence to get the money, it's going to be the cheapest route to do it.
And he's not coming out of pocket necessarily, except to pay back the refied mortgage.
Correct. Once that, and it's a 30-year fixed loan, and once that's established, you have that money, it's cash.
We see a lot of people right now in this situation where they either have their free and clear in their home, or they have such a low interest rate and so much equity, they might actually consider moving. But it just doesn't make sense to them because they haven't necessarily outgrown their home, and they really like their low rate. They really like their neighborhood. So, like, the terms to move are just not that desirable. So, Wolf's situation here, buying land that's an asset that he'll have for his kids. I mean, what a wonderful way to invest in the next generation. And, you know, Jay nailed it. There's not making more.
Wolf, does that satisfy you? That answer sounds like the plan to me.
Pretty much. Oh, by the way, Shelly, the 2 girls, last time we talked, they were fosters, and we adopted them.
Oh, that's wonderful, Wolf. Man. God bless you. God bless you, Wolf. That's a great. So is he able to do that same plan that Jay said if he hadn't paid off his mortgage?
Potentially.
Okay.
You could, if you had an existing mortgage, you would essentially take what is there, roll it into one mortgage, and have them both together.
Gotcha. And so in that situation, you're paying more, but you're paying off 2 separate entities.
Yeah, you can go up to 80% on a cash out refinance. So if you think about it, if you already owe, say, 100, right, it's going to cut into that 80% because it's a percentage that it's a loan to value, right? Your loan versus the value of the house. So you can cash out to 80% of that. So anything you owe on your existing mortgage cuts into that available 80%.
That's right.
Okay. All right.
You could utilize what would be left.
What would be left to buy the land,
Right.
or at least put the down payment on the land.
Correct. It was cash flow. Even
Right.
if he didn't have cash in the bank, he can flow cash by doing that the same way.
Use that for the down payment, and then if you still need more money, then you go to your community lender and get a land loan.
But here's a question. Hold your thought 1 second, Deborah. Here's a question, though. He's buying the land for kind of personal use. So how does a bank lend money against something like that? Because there's nothing being made. Does that make sense?
It's called a lot loan.
Yeah,
Okay.
the land itself is the collateral.
Okay.
But
okay.
that's why the terms are not as desirable.
Correct.
Like the cost of the money is going to be more.
Yes.
Would he be better off if he said, hey, I'm buying this land, or not if he said, but he really was buying the land for the two young ladies, but also the young ladies are going to charge hunters to come out and deer hunt in deer season X amount for a week or whatever? Does that become a different type of loan and an easier loan to do?
I think that if it already existed that way, that might be a different answer. But if he purchases the land, it is what it is. He can choose what he does with it.
Shelly, I think we need to be talking about what the expectations for mortgage rates are in the coming year.
Okay. What are the expectations for the mortgage rates in the coming year?
Yeah, I'll handle that one. So we just had the half-point cut. Yes, we've talked about that's not mortgage rates, but it is the cost of money. So what's going to happen next? Great question. So we're expecting another 50 basis points before the end of the year. The expectation now, unless things change, most likely will be 25 basis points in November and another one in December, same amount. The Fed likes to do things like a step. If you look historically over the rate cuts and you Google it, you'll see it looks like a staircase. That's what I was mentioning earlier. They want a measured, landing. They want to try to control this.
And everyone was surprised that it was 50 points, not 25.
They went hard on the 50 basis points. A lot of past Fed members started chiming in and saying, hey, I think we probably need to do more than we expect. So that's why they did the 50 basis points to get started. Now, Chairman Powell said, hey, guys, don't get so excited. We might not do 50 basis points every time. Right. So if you read between the lines, that means 25 basis points. And they've already said we want another 50 basis points before the end of the year, data dependent. So unless inflation comes creeping back in, that's what we're going to see. Furthermore, they said we expect another full percentage point in 2025. Mm-hmm. So, now we're looking at another 150 basis points coming at us in the next 6 months, 9 months.
Right.
That's why we think the rates are going to continue to go down. And then I don't go too far down technical rabbit hole, but once we get, it's a technical question. Once we drop that an additional 150 basis points, the Fed overnight rate will be in the low threes. If you look historically, how do you understand how that parlays into a mortgage rate? Past performance is the best indicator of future information, right? So typically you're somewhere between 1 3/4 and 2 percentage points higher than that Fed funds rate. So
you're talking 4.5% to 5%?
I'm talking 5 1/4. So if it's down to 3 1/4 and we're talking 2%, 5 1/4, 5 1/2 is where I expect it to land. Now, your mileage may vary, and I don't have a crystal ball. I do follow it very closely, but that's my expectation. I think we're going to settle into a niche somewhere in the mid-5s next year.
And Shelly, that is a healthy place to be for the real estate market.
I'm sure. It sounds like it. Now, why is that rate so different? Is it because of the bonds versus what the Fed's rate is? Is that why it's a big difference? Or 2% difference?
It's just something historically that's always panned out. If you take time to extrapolate how it works, you'll see that that's a typical spread, sometimes a little more, sometimes a little less.
There's a lot of factors that go into it, and I never try to pretend to be an economist because I'm a real estate professional. Right.
Yeah. So here's my question. I'm a new home buyer. Mm-hmm. I go to Deborah, I buy a home, say now, October, November. The rate is a certain point. But based on what you're saying, it's going to go down. Hopefully. Am I allowed to refi that quickly?
Yeah. Typically, you want to wait a 6-month period.
Okay.
But there is no mandatory wait time. So you can do it whenever it makes sense. Usually, it takes at least that long for it to make sense.
Gotcha. 404-872-0750, 1-800-WSB Talk. We're coming back on our last segment of Inside Georgia Real Estate with Deborah Morton. IGRE@WSBradio.com. That's the email. If you can't get through, that is the email to email Deborah a question. IGRE@WSBradio.com. We will be right back.
95.5 WSB, your 2024 election station.
Well,
Ladies and gentlemen, Inside Georgia Real Estate with my dear sister and friend Deborah Morton of Clario Real Estate. Yes, I got all that right. I got all that right. I've got this brain.
Excellent
I got
job,
this
Shelly.
brain thing going on. Deborah will tell you off air, but I just every time I say her name, I'm wondering if I'm messing up. It's now it's like a thing.
But
now.
you remember me.
I do remember. Ryan Charles and Jay Goss of Alcova Mortgage. Before we go any further, tell people how they can get in touch with.
Yeah, well,
Alcova?
I think the easiest place is to go to the Inside Georgia Real Estate website. Send us your questions, your information, and we'll get it over to them.
Okay.
Yep.
InsideGeorgiaRealEstate.com. Off air, I asked this question. Will we ever go back to a time of no-doc loans?
Yeah, that was the wild, wild west, and I think we've learned our lesson from some of that activity. No, I don't think we'll ever see anything like that again.
It was unsafe.
Yeah, it was irresponsible, and
Why did it get to that point?
there was not enough regulation. Well, I could go down. It's a long story.
Right.
But there's rating agencies that didn't drop the ratings when they should have.
And
in my
there's
opinion.
better controls in place now.
Yeah.
Gotcha.
It is, I don't want to say hard because I'm here to help people buy houses if that's what they choose to do. But it is not an easy process, and that's why we're here to talk about it, because there are safeguards and controls in place to make sure that people don't overbuy what they can't afford and that they don't position themselves badly. And mortgages are backed by the government. That's an important part that many people may not realize. The reason these safeguards are in place are to protect all of us. We don't need another housing crash.
Right.
But we are, the pendulum is slowly working its way back to the center. There are programs out there now that help with self-employed borrowers, bank statement programs. So there definitely are more flexible options than there used to be.
When you say more flexible, who does that appeal to mostly?
Typically, your self-employed borrower. Let's take a real estate agent. They're self-employed. Their income is continuously flexing throughout the course of the year.
Anybody who works on commission or with
Absolutely.
tips, if you're in the hospitality industry. Yeah.
All right.
Shelly, the majority of the business owners in our area, in our country, they're self-employed. They have, maybe 8 to 10 employees. Those are the people who are the backbone of our country, and they have the hardest time
That's right.
getting mortgages. And that's near and dear to my heart, because these are the people who put up the risk. They're employing so many of us in the country, and they have all the risk and also all the hassles.
Right.
So if you're self-employed and you're struggling to get financing or you want to buy, reach out, because I have a heart for those people, because I'm an entrepreneur at heart.
Sure.
The name of the show is Inside Georgia Real Estate with Deborah Morton. She's the founder and owner of Clario Real Estate. Go to the website, get some information. If you have questions, you can email Deborah at igre@wsbradio.com. Ryan, last words before we let you guys go.
Well, it's been great to be here. My advice to you is pull in a professional. Deborah knows what she's doing. Reach out to her. Have that first conversation. It's going to be an intimidating process, but just have that. She's really easy to talk to. She'll get you squared away. She'll send you to us if it's the right fit. But take her advice. Everyone needs to reach out to someone who they can trust.
Thank you, ladies and gentlemen. We'll see you next week.
Thanks, Shelly.
I'm Lupe, a mom raising 2 kids outside Los Angeles. One day, I got the message no parent wants. Immigration raids in our neighborhood. Schools on lockdown. Families terrified. Raids don't keep us safe. They're meant to break us apart. While the government cuts funding for our schools and hospitals, they spend more to disappear our neighbors. But we're parents. We're moms. We protect each other because we know every family deserves to feel safe.
Text BUILD to 78757. This ad was paid for by United We Dream.